Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The statement, Central Bank Governor. Foreign reserves exceed 140% of local currency issued, reveals a critical financial position that highlights the central bank's strength in maintaining a strong financial cushion. This statistic implies that the central bank holds foreign reserves assets like foreign currencies, gold, and other international financial instruments totaling 140% or more than the total local currency it has issued to the economy. Essentially, this means the bank possesses a solid base of liquid assets to back its currency, which fosters confidence in the national currency's stability. In the context of central banking, foreign reserves play a fundamental role. They serve multiple purposes, primarily providing a safety net that can help a country manage its currency's value and respond to economic crises. High foreign reserves are particularly beneficial because they act as a defense against potential currency devaluation. When a central bank's foreign reserves exceed the local currency issued, it has a buffer that allows it to intervene in the currency markets if needed. This intervention could involve purchasing or selling the local currency to manage its exchange rate. By ensuring a significant stock of foreign reserves, the central bank demonstrates its capacity to handle fluctuations in demand and supply in the currency market. The level of foreign reserves relative to the local currency is also a testament to the country's economic resilience. Turmoil. Central banks typically issue local currency, which is then circulated throughout the economy. A balance is essential in this process because issuing more currency without adequate backing can lead to inflation, diminishing the currency's purchasing power. In economies with high foreign reserves, the central bank can manage the amount of local currency issued to maintain stability. If a central bank has more foreign reserves than the currency it has issued, this excess reserve implies that the bank could, if necessary, cover all the currency it has issued and still retain surplus assets. This situation provides strong financial backing for the local currency, which is essential in maintaining the public's trust. The ratio of foreign reserves to issued currency is also a reflection of fiscal policy and monetary prudence. It underscores the central bank's efforts to avoid excessive currency printing and to keep inflation in check. When a central bank overissues currency, the money supply increases relative to goods and services available, which drives up prices and causes inflation. However, by maintaining reserves that exceed the currency in circulation, the central bank demonstrates its commitment to disciplined fiscal management. This approach benefits both the local population and international stakeholders, as it signals a well-managed economy and strengthens the currency's reputation in global markets. Furthermore, high foreign reserves allow the central bank to navigate unforeseen events such as global financial crises or sudden economic downturns. By having a significant stockpile of foreign reserves, the bank is prepared to shield the local economy from external shocks. For example, if a nation faces an abrupt decline in exports due to global demand changes, it might suffer from a shortage of foreign currency. In such situations, high foreign reserves act as a buffer, allowing the central bank to manage any foreign exchange shortfall, which helps stabilize the local currency and maintain economic continuity. The central bank's strategy of holding foreign reserves also relates to maintaining exchange rate stability. A central bank with high reserves can influence its currency's value by buying or selling foreign exchange as needed. For instance, If the local currency's value depreciates, the bank can intervene by selling foreign reserves and buying back the local currency, thus supporting its value. Conversely, if the currency appreciates too rapidly, the bank can purchase foreign currency, slowing down the appreciation to maintain a competitive advantage for exporters. Additionally, high foreign reserves foster economic confidence domestically and internationally. When citizens know that their currency is well backed by foreign reserves, they are more likely to trust the currency and the economic policies in place. This trust stabilizes consumption and investment patterns, contributing to economic growth. Internationally, high reserves are a signal to investors and trade partners that the country is financially sound. Consequently, it makes the country a more attractive destination for foreign investments, which in turn can drive further economic development. The central bank's position with substantial foreign reserves also indicates an ability to meet its foreign debt obligations without disrupting the local economy. Countries often borrow in foreign currencies to finance development projects or to stabilize the economy. High foreign reserves ensure that the central bank can manage these obligations even if there are economic shocks. If foreign exchange reserves are insufficient, a country may struggle to repay its foreign debts, risking default. Such a situation would harm the country's credit rating and increase borrowing costs. Thus, by holding foreign reserves in excess of issued currency, the central bank helps maintain the country's creditworthiness and economic stability. Moreover, foreign reserves act as a hedge against inflationary pressures, especially in economies vulnerable to external price shocks, such as changes in oil prices or commodity prices. For countries that rely heavily on imports, such shocks can significantly impact inflation levels. The central bank can use its reserves to stabilize prices, as it can mitigate currency depreciation by supporting the currency through reserves. This capacity to manage inflation protects purchasing power and sustains economic stability for citizens, ensuring that the cost of imported goods and services does not skyrocket unexpectedly. Foreign reserves are not only an indicator of financial stability but are also part of a broader strategy of economic sovereignty. With ample reserves, the central bank has more leverage to pursue independent monetary policies. This autonomy allows the country to shape policies aligned with domestic needs without undue dependence on foreign financial institutions or international markets. For instance, a central bank with high reserves is less likely to be subject to the pressures of conditional loans from institutions like the International Monetary Fund, IMF. It can instead implement measures that reflect the nation's unique economic conditions. The central bank's ability to hold high reserves also signifies that the country may have diverse sources of foreign income, such as robust export sectors, foreign direct investment, or a steady flow of remittances. These sources enable the central bank to accumulate foreign reserves over time, which supports a sustainable economic model. In countries where exports or remittances are significant, foreign reserves serve as a repository of value generated by economic activity. These reserves are then reinvested back into the economy through various channels, such as financing public projects or stabilizing the currency. To sum up, when the central bank governor states that foreign reserves exceed 140% of the local currency issued, it reflects a strong economic stance backed by prudent monetary policies and sound financial management. This figure underscores the central bank's capacity to handle currency volatility, support economic stability, and maintain a trustworthy financial environment. High foreign reserves serve as an assurance of the currency's strength, a shield against inflation, and a mark of economic resilience. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.